This time next year, is the U.S. going to finally have a privacy law?
I think it's quite likely. In fact, most of the large internet platform companies have endorsed such a law, and I think that would bring more clarity to the privacy issues that have dogged these companies and dogged the stocks. So we think that could be a likely outcome, a bipartisan outcome, and we think ultimately that could be positive for these companies.
You actually see that as a positive catalyst for the stocks if the companies finally get regulated. Explain that.
In the sense that there is obviously some disaffection among users who are concerned about the use of data. I think Google and Facebook have endorsed data privacy laws in part to give their users more confidence in how the companies are using the data. In fact, we've seen in Europe under GDPR rules, which are similar to what the US might enact, that those laws have benefited Facebook and Google to some extent. And so I think for those reasons, it could turn into be a positive catalyst.
Rob, when you look at 2019 and all of the negative headlines that have been out, particularly for Facebook, but I guess some for Google as well, over all of this use of data and the issues around, you can call it privacy, you can call it Big Brother, I don't know. Does that start to shift in the other direction? Because I don't see, barring some comprehensive, just tectonic shift in the law, which doesn't look likely to happen, I don't see how anybody else really disrupts Facebook and Google.
Yeah, I think there's likely to be some reversion given, the fever pitch that we've been at for most of the year on this issue, going all the way even prior to the Cambridge Analytica scandals of March. So I would expect that to normalize somewhat. And at the end of the day, yes, there's been some misuse. Yes, there's been some naivety about the protections that they need to have in place by the platform providers. But at the end of the day, folks enjoy these services. They're relatively non-obtrusive. They get an awful lot of value and engagement for free at most cases. And I think that's what we'll carry when all is said and done.
Colin, given the sell-off we've seen in many of the tech and communication stocks this year, be it FANG or be it some of the others that we talk about frequently on this program, what do you see as buying opportunities?
Well, we actually looked back at the 4 last market corrections, and 6 months after the bottom, there were 3 stocks that consistently outperformed. Those were Alphabet, Amazon, and Facebook. And Activision was a 4th. We actually made Facebook an honorable mention given some of the lingering overhangs and promoted Amazon to the top of the list. But those 3 stocks, Alphabet, Activision, and Amazon, consistently outperform in a rebound scenario. So we like those 3.
What about you, Rob? What are your picks?
Yeah, I think we look at the appetite for risk being the big victim of 2018. The S&P multiples collapsed over 4 points. It's a really big reversion over a short amount of time. And of course, the large cap stocks come down along with that. I think looking into the new year, I do expect either we head into recession, which we are not calling for, or the risk appetite increases. In that case, the biggest reversion is probably the fallest that have fallen, as well as the best growth stocks. So the best growth stocks are Amazon and Netflix. The fallest fallen is Facebook. And its multiple is close to market. But I would actually look across to China because you've got the revaluation on the fundamentals plus the country risk and concern that I think will also normalize. And you may have sort of a compounding effect of normalization that could benefit those stocks even more so than the U.S. listed names.
Colin, when you look at these big tech names, though, the China impact seems to be mixed. I mean, yes, on the one hand, you've got Apple, which has about 20% of sales in Greater China, but then Facebook's not really there, Google's not really there, Netflix isn't looking at China as a particularly big market, Amazon notoriously has struggled there. So are they to some degree protected, or are they just going to get swept up in the broader macro impact just like everybody else?
Well, to some extent, they'll be swept up. I mean, Amazon, for one, a lot of sellers, retailers that sell on Amazon source product from China. So there is exposure. But as you mentioned, Google and Facebook essentially are not present in China outside of some advertising relationships. So I don't expect that to be a major theme. And quite frankly, the secular growth drivers in e-commerce and online advertising will protect those companies whether there is a China standoff or a recession, those companies should do well or better than most other industries in that scenario. So we like them in either case.
So China's been one of the big macro overhangs, Rob. The other one has been the Fed, and this idea that liquidity is not what it used to be. And the Fed is tightening its balance sheet and interest rates. And these were the names that were the biggest beneficiaries of the easy policies over the last 10 years. When you look at the tremendous rally that they had over the last decade, how much was it tied to fundamentals and how much was it just exuberance and a lot of liquidity and the fact that these were the beloved names in a market that was going straight up? And I'm wondering that because some people are wondering if that's the biggest risk for them next year on the way down.
You know, looking at that, it's tough to say. But I think what I look to is the relative valuation to the market multiple. And if you look at that as a leveling, if you look at the FANG stocks, each of them, their valuation versus the market multiple actually got lower in the last expansion. The market multiple went up a lot, from 13 to 18.5 times. But the relative valuation of the Amazons or Googles or whatnot really didn't change a lot. So I would argue that it wasn't that they were benefiting to an outsized impact. I think they were just going up in relation to the market.
In other words, it wasn't a bubble. Is that what you're saying?
Unless the whole market was a bubble. I think the individual securities, their relative valuation to the S&P actually went down.